We're going to get into what we call the top 5 stocks to watch. Before we get into that, I just want to encourage you to like and subscribe if you're getting value out of today's video so far. And so the top 5 stocks that we watch every single week on Stock Watch Sunday are stocks that are just really have something going on. Maybe there's a potential catalyst. Obviously, we talk about earnings and stuff like that. But this week, we know that banks are going to be the big topic of discussion. And the first one we have is what, Christian?
So the first stock we have is Bank of America. They have earnings Wednesday pre-market. So Wednesday, October 14th pre-market. The estimates are 47 cents a share. And so what we do for nobody that knows, we should probably preface this a little bit. Us fools over here, we're going to give our best guess.
Yes.
So we do this a little bit more for fun, but we're going to talk about what we think is the outcome. On this stock, I actually think Bank of America misses slightly, and I'm going to say it's going to come in at 42 cents a share.
Yeah, for me, I said 45, so I think it's going to miss as well. Estimated earnings per share are 47 cents, and they come in Wednesday after hours. CEO of Bank of America didn't really have any good positive things to say about the company and really the industry overall. But I don't know. We'll see if they were able to, like we talked about, pivot and that sort of thing. A lot of the analysts have kind of adjusted their expectations because of obviously the Rona and having how it's been impacting a lot of these banks. So are the analysts' expectations low enough, or are they still too high for a lot of these banks? And I think they're still at least a little bit too high for the time being. I don't think earnings are really going to be a factor as much as what their outlook is. And we talk about the outlook all of the time that, maybe the expectation here isn't necessarily that they'll beat earnings, but they'll actually have a really nice outlook. Maybe they're starting to make the turn here. Are they or are they not? Or is it still more of the same? And so if it's still more of the same, I think it'll lend itself to scoop up some more Bank of America. And, we'll see. I don't know. It's going to be interesting to see how this actually plays out. But I do think I agree with you that they'll probably end up be missing slightly. But looking at it, though, it's pretty cheap. Eventually the banks are going to start moving around. So after earnings come out on Bank of America, it may be interesting to see how this plays out, because it could give you an opportunity to get them on the cheap, because they're eventually going to move back up. It's a matter of when, not if. And so we always tell people not to try to time the market, but I think this would be a really good opportunity to just kind of skate in on this after earnings, because if the reaction isn't exactly as what people would hope it would be, might be something that you guys could really take advantage of, especially when it comes to a lot of the emotional trading involved after earnings come out.
Yeah, I saw somebody in the comments had said something about I'm sticking with Square and or staying away from banks. And okay, cool, that's fine. We got a lot of stocks that everybody's looking at that are at all-time highs.
Yeah.
And we like Square, but here's the deal. Bank of America is down 28% year to date, right? That's beautiful. It's room to run. Now, you have to be patient with it, but $25 level is really good. Like it's holding up pretty well. And so keeping an eye on it. I don't think that there's going to be much worse news. So I don't think it's a case of like, oh my gosh, Bank of America is going to tank. I think it's more about what's going to make it move. I don't think earnings is going to make it move. A stimulus is going to make it move.
Yep.
And then potentially the dividend, right? Remembering those things. So that's going to be what we're waiting for. But I think there's going to be a time when you're going to be like, I wish I got Bank of America at $25. And so I think we need to start taking a little piece of our portfolio and putting it into these stocks that we know they're going to be good for the long term, and just kind of let them sit, i.e. the banks, the airlines. The banks are in better position than the airlines.
Oh, yeah.
Because the airlines actually have to wait for people to feel comfortable, for the social distance to be lifted. So anyways, I digress. I think it's great to be on the Squares and all these tech and all the stuff that's 52-week highs, but they're running hot.
Yeah.
Play these ones that have room to run.
Yeah. And I mean, there's no reason to believe that Square's going to come crashing down or anything like that. Not saying to just abandon those altogether, but there's something to be said for going after stocks that have just been beaten down. And I think that's the kind of message that we're trying to just get across, that just because it's down here doesn't mean that you shouldn't be looking for it as a potential buy. Steve King, welcome, or thanks for the donate, man. Appreciate it. Says watch list made me great money last week. Thanks, fellas. You're absolutely welcome. Steve King's always one to support us, and he's always crushing it on here. So, and the Chaos Crew as well, always looking to support the channel. So, thanks so much, man. Appreciate the donate. Next one is going to be Johnson & Johnson. This is going to be very interesting. Tuesday pre-market estimated earnings per share are $1.96. I say that they beat that slightly, coming in at 201, but not sure anyone's going to really necessarily care about those numbers as far as earnings are concerned. The numbers that they're going to care about is the number of days we have until a vaccine has been developed. And so that's really kind of what's been moving Johnson & Johnson here. And if you look at this ticker symbol JNJ, it has been a little bit all over the place. They are in the middle of phase 3 trials right now. They're still slightly down on the year. And I think that this is a company that's definitely in the front running, a front runner as far as the vaccine's concerned. We've talked about Moderna before, and what a joke that's kind of been up to this point. But we've had some really good ones that are making some really strong developments. We've talked about AstraZeneca, Pfizer, and Johnson & Johnson is very much in that conversation. The CEO said that shareholders back in July, two shareholders back in July, he's dedicated some of the best assets towards the goal of achieving a vaccine. And they have goals of trying to develop one or have one developed before the end of the year. It's interesting too. A lot of these companies are coming out and saying that the vaccine will actually be administered via like a nasal spray. Some of them are going towards that direction rather than just a traditional injection method or what have you. So this will be interesting. I don't think necessarily it's going to be the earnings in general that are going to be what moves Johnson & Johnson. It's if we get any kind of updates as far as the vaccine's concerned that I think really gets the movement on Johnson & Johnson.
Ah, man, what'd you say? 201?
Yeah, 201.
Damn, you got me nervous. I'm going to be honest. I don't feel confident in my numbers this week.
Yeah,
but I'm not changing it. Okay. I actually also don't think Johnson & Johnson is going to beat. I have them actually missing $1.76.
Ooh, you got them low.
Considerably. Yeah.
Well, I had them beating. I have them beating at 201.
Yeah. So I'm beating, and I have them missing pretty egregiously. And I will say I wasn't confident, but I'm trusting my system.
Okay.
I'm sticking with the $1.76, sticking with the miss. I agree with you 100%. It's about the vaccine. I want to remind people when, we're not talking as much about the vaccine, but really when there was this battle, Johnson & Johnson, they've been quiet. They've always been kind of quiet. Yep. And back in August, if you remember, the US had purchased like 100 million vaccines. And I think and then the EU had announced an agreement where it was 200 million.
Yeah.
And so when this goes through, they benefit. But what we really loved about it was fundamentally, it's a great company. It isn't reliant, like you said, just on the vaccine. It's well run, and there's other opportunities outside of that. So it's not contingent upon it, but it will move.
Yeah.
As well. So I love it as a way to hedge your bets. And as I pull the line from August 14th of our watch list, when we had it on the watch list, if we get a vaccine, this stock may explode, and it still stands true. So
yeah,
looking forward to it. And I'm going to be, man, I'm nervous about $1.76, but I'm gonna be dancing if I get this one.
The fact that it's been holding up this well above $140 a share has been really telling as well. If by some chance earnings don't go well, look for an opportunity to grab some Johnson & Johnson, because I do think it's worth holding on to some around 143. If it can't hold that, then the next stop for this one's around 137. So look for those two areas as far as potential entry points. Not sure I would be into this one before earnings, but I'm going to be definitely watching these after earnings to see what the reaction is. If things are positive, look for breaks above 155 and even 157, which is post-crash highs at 157. That will actually be the 52-week high if it actually breaks up over that 157 mark. So some really good opportunities, I think, here on Johnson & Johnson. We'll just kind of have to wait and see, I think, after earnings to kind of really make the move and make a decision on whether or not we want to hop in on this. So sure. Just wanted to shout out Chris. What is that? Chris Lave. Welcome to the Chaos Crew, and Shane for the donate. Thanks, man.
All right. So number 3, we have Honeywell earnings Thursday, October 15th. Estimate is $1.48 a share. Now, here's the thing, everybody. we've gotten some mixed dates online. So CNBC and NASDAQ has earnings as October 15th. TradingView has it as October 16th. Although I love TradingView charts, I don't believe a damn thing TradingView says about earnings. So it's not going to be here October 16th. But there's also October 22nd. So it might be October 22nd, but everything pertains the same. The numbers are the same. But we're going to say October 15th right now.
Yeah.
But keep your eye out on that. I have it slightly beating at $1.53 a share. I really like Honeywell. I've liked Honeywell for a while. It's not the sexiest company. It's not going to blow your socks off. Fundamentally, they're great. Some things towards exposure into aviation, but they have a lot of products that benefit that can help with the Rona. So like. Yep. They have cleaning products, they have air filters, they stand to benefit safety protocol. So one thing I wanted to share with you, Brad, was a breakdown of their business. And so their segments, they have aerospace, which is down more than 25% for their Q3 guidance. HBT, which is building technologies, down more than 10%. Performance materials and technologies, down more than 10%. And safety and productivity solutions, which is what we're talking about, up less than 10%. So up about 7%.
Yeah.
And that's the opportunity areas. So obviously a lot of things are down. That's growing. I still think they slightly beat. I think that's built in. Obviously, aerospace isn't going to do as well. But I think the other two, the building technologies and the materials and technologies, I think we see stronger guidance from them. So as long as Honeywell gives guidance, I actually feel really good about this stock. And I feel really good about this stock long term. I'm a big fan of this stock. $1.53.
Yeah. So, I mean, it's interesting that we've been pretty conservative on these so far. I actually have them beating as well, but at $1.50 is where I have them coming in at. Here's the thing about Honeywell, and you bring up some really good points. One of them, especially as it relates to the aerospace side of things, 34% of their total revenue is generated from the aerospace side of their business. They just acquired Rocky Research, which was a huge acquisition for them last week. And the thing of it is, with them wrapping up the cleaning products and that sort of thing all into one, you kind of think about, I wonder what happens when everything kind of goes back to normal as far as flying is concerned. How are they going to impact a lot of these airliners when it comes to safety precautions and that sort of thing, keeping the space clean every time they drop passengers off and bring new ones on, all that good stuff. I think that plays a huge factor with Honeywell, and I think that they're only going to continue to go up from here for that reason. So you definitely bring up some good points there. The other point that I wanted to kind of bring up, the last 4 quarters, even through the Rona and everything, the last 4 quarters in a row, maybe even more, I didn't go back that far, they've beaten earnings handily. And so I think that we're actually being a little bit too conservative, both of us. I wouldn't be surprised if we see a 160 or 165 beat on this one, but I like Honeywell a lot. And again, just to kind of reiterate, we're estimating that earnings are supposed to be on Thursday or Friday, and then we have the outlier of October 22nd. I actually had Yahoo Finance saying Friday too, just before we went live. So it's who knows, but just make sure that you're confirming with your most trusted media source. And yeah, I mean, if I would think that if NASDAQ is saying the 15th, that you would have to go with the 15th, but who knows? But either way, I think they're going to do well. And if you're looking for an opportunity to grab some Honeywell, I like it at 174. Right where it closed at on Friday. If by some chance this does pull back, look for some areas for a possible support around 165. A bounce there would be really nice to grab some on Honeywell. Just to check it in with you guys here, Sham, welcome. Thanks for the donation. Appreciate you. And Mahid, welcome to the Chaos Crew, as well as Paven. What is that? Vermula? I'm terrible with names. Well, welcome to the Chaos Crew. Moving on, and this is one that a lot of you guys I know have been badgering me and Fat Man Zoom about. Here's, we get it. We've done this before, and it feels all too familiar with Rocket and how everybody was losing their goddamn mind because Rocket was, getting pummeled and it was down and people just didn't understand what was going on. We were like, be patient. it's worth it. You're going to like Rocket. Don't worry about it. Stop worrying about the day-to-day and worry about the big picture. And that is why Penn is on the watch list this week, because it has gotten beaten down a little bit because of a couple things. The sports betting industry as a whole has kind of taken a hit over this past week with increased positive Rona cases in the NFL. We saw yet another Tennessee Titan came back with a positive test, as well as we saw the New England Patriots and Denver Broncos game that got pushed back to next week. We have the Titans game that's also pushed onto Tuesday. I don't know if I've ever watched a football game on Tuesday, but that'll be interesting to see. So as far as Penn's concerned, there's definitely some concerns here, but what I will say is, and I just lost Christian, but that's okay. We're going to continue here. What I will say is that Penn National has so many other things in their hat. It's not just about sports betting. They have physical locations. They are the largest regional casino in the country. So they're starting to open back up. They have earnings coming out in the end of the month, and I think that they're going to do really well. I think holding on to this and not panicking and not worrying about where Penn is at in the day-to-day is going to help you in the long run. I'm looking at this on the daily chart, and I'm seeing that, 62, 64 a share is going to be one that's definitely going to be a good stock to be hanging on to. And we'll see where that goes and where that takes us. But I'm going to say that this will be a buy if we can see a bounce from 62, 64. And that's where I'm going to be looking at this moving forward into this week. I'm definitely holding this one in the public account for our Chaos Crew members. And that's where I plan to add more if it does come back down to those levels and we can see a bounce. Let me just check back in with Fat Man Zoom here. I don't see him. Okay, well, I guess he'll be back at some point. But I'm not sure where he's at. But anyways, moving on, we have Morgan Stanley Thursday pre-market, and they have estimated earnings per share at $1.25. And so let me go ahead and actually I'm going to check in with him. He's waiting in the room, he says. Okay, hold on one second. Waiting in the room. Let's see. I don't see him. I got nobody waiting in here, my man. Oh, there he is. There he is. When we're going live, things happen.
Damn.
Things happen when we're going live. That's all right. We'll edit that for tomorrow's clip.
I'm going to tell you, can you see me, or am I still a bunch of cursors?
We can see you. We can see you.
Listen, first of all, Ema, we got beef, and if you want to keep bringing it, we can bring it. It is not my camera. My camera is totally fine. It's the stream with YouTube, but you keep talking trash on camera, it's going to go down. Anyways, let me say something. I know you started Morgan Stanley. I was listening to everything.
Okay.
Penn, we love Penn, down 11% on the week. I just wanted to point one thing out really quickly as far as that. Listen, it's all about Barstools. If Barstool doesn't go, Penn doesn't go. So We're banking on Barstool. DraftKings, between their offering, between the NFL and the Rona cases, I think a lot of the things that have been headwinds for the company have been out of its control that I don't think will. I don't think they're material. So We've talked about this. So we both are very confident in that. But the one thing I wanted to just point out, just number for people, I like to bring some data. So Penn expects to convert 5% of Barstool's fans. All right. So that's 5% of 66 million fans, and about 25% or 5 million of its loyalty members into online gamblers. So they're not spending a bunch of money like DraftKings, FanDuel in their marketing. They're spending their money on their partnerships. They spent their money, they're spending their money on getting Barstool, and then Barstool is being smart about, we like their partnership with like Prime Time and the names and the talent they bring in.
Yeah.
That's just going to continue to create extremely loyal customers, or loyal. They're not even customers. They're like cult members or members. So anyways, Barstool is going to be the thing that changed everything for Penn National when, the history is written on that company.
Yeah. I mean, it's all about the culture to them. I mean, DraftKings doesn't have a loyalty like Penn National does or Barstool does. And really the success of Penn right now, I think, rests a lot on Barstool. So we're just gonna run with that. And so as far as from a loyalty standpoint, FanDuel doesn't have that. DraftKings doesn't have that. None of these other sports betting platforms do. And I think that's the huge competitive advantage that Penn, aka Barstool, has. And I think that's really what's just going to set them apart and going to continue to add value to this company.
Yeah. And okay, so let's get into Morgan Stanley. This is one I really wanted to talk about. Do you mind if I just run with it right here? Did
Hop
you talk
on in,
about
man.
the estimate?
I just said that they have earnings coming out pre-market on Thursday, estimated earnings per share at $1.25, and that's as far as I got.
Okay, barely beat, $1.30. That's not what's important. So they beat, coming in at $1.30 is my prediction. I am excited about this earnings, like really excited about these earnings. And it goes back to something I alluded to earlier about the diversification. So last week, Morgan Stanley announced that they were acquiring Eaton Vance Investment Manager. It was a $7 billion investment. You can search this. You can get all the details about this. But it's a shift that they were making to really diversify their revenue and focus on wealth management and investment management. And they've actually been planning this. I didn't know this, but it's been like a 10-year transition. And this was sort of like the end of it. And so they've recently had 2 acquisitions that are generating 26 billion in wealth investment management revenue in 2019. So over half of its revenues and fees are going to come from that, is what their expectation is. So we look for companies that are active, that are proactive, that pivot well, and it looks like they're getting ahead of the curve. So I'm really excited for what they tell us in the earnings, and as always, the guidance, but really what this means for their company. So I'm super excited. I think it's going to be a great earnings for them. We'll see what's to come.
Yeah, I agree too. I mean, we just talked about this in the beginning of our show before we got into talking about the top stocks, about what good banks would be worth looking at. And this one, Goldman Sachs, we talked about some earlier about just how well they're running the company. And obviously at the beginning, one of the first stocks we talked about was Bank of America, which was like, they're not doing so hot, but this could be a good opportunity for you to get in on the cheap. Whereas Morgan Stanley is kind of like, it's still cheap and they're still going to crush it. So you're looking at this and there's some really good opportunities here. I think that they beat as well. I'm looking at $1.28 is what my estimates were on this. And this is really conservative. We're kind of in an impasse right now, especially with the banks, because we just don't know. We're trying to be cautiously optimistic. And I think that's why Fat Man Zoom and I have been so close to the numbers. We want them to beat. But we don't think they're going to go crazy. It would be great if they do. But looking at Morgan Stanley is from a technical side of things, $46.13 seems to be a nice little area to where if it comes down and it bounces off of, could be some really nice, a really nice area to grab some on the cheap. If you're looking for a resistance break on this for a continuation, I think something over $52 a share could represent a nice upswing and a really good indicator that we're going into the right direction as far as a positive move north. But this is going to be a good one, and that is the 5 top stocks to watch for this week. If you guys are interested in checking this out, you want to be a bigger part of this on a daily basis, come join the Chaos Crew. We have a lot of people that have already joined just recently, and you get a watch list from us every single day of the week. Not only that, but you also get access to the public portfolio for the Chaos Crew, as well as private live streams throughout the week as well. If you guys want to be a part of that, hit the join button or the link in the description. We would love to have you guys over the Chaos Crew. There's so many people in here, and the community is just growing. It's really great to be a part of.